quite okay yesterday. We managed to, pencil out about a 140 odd point gain. Yes, it was a volatile ride, but we largely spent the better part of yesterday's trading session trading in the green. So closed in at that 22,584 print for the Nifty futures, and that's really not all that bad. Yes, the FII selling continues, and the number did look large yesterday once again, but we'll get to the nitty-gritties of that in just a bit. Just looking at, what's happening overnight in terms of the global movement and what Trump has been saying. He's warning Iran clearly, saying that every shot fired by the Houthis will be looked upon, from this point forward, he says, as being a shot fired from the weapons and leadership of Iran. Iran will be held responsible, saying that they will be suffering the consequences, and those consequences will be dire. That's what Donald Trump has said. Having said that, for the markets, when it comes to the US, it's been an okay session. The major averages have managed to see almost 2 days of a winning streak. Remember, it was a strong handover on Friday, and last night as well, it was a good 350 points up in the green for the Dow. The S&P as well managed to hold out by about 0.6%. Nasdaq a lot more tempered, but still in the green. So it's not looking all that bad. At least we have a decent handover from the globe. Trump is clearly pinning the blame on Iran for future Houthi attacks. And now all eyes are on the outcome of the two-day Fed meet. I guess that would be the big trigger point for markets.
So, Asha, let's understand what the global setup means for us. The first thing every morning our viewers should see, has anything new come from Donald Trump? The answer to that is actually no. Nothing incremental has come which will impact our markets. So there is no news, at least on the Trump tracker, if I may use that word. Then you look at the major indices. Major indices have managed to crawl back up. Third, you need to look at what the mood point is in terms of where the 10-year is, where crude is, and where global volatility is. The new dimension in last 2 days is that global volatility has subsided quite a bit. So at 20%, market volatility, I think, is measurable. Yields are at 4.3. Dollar index is sub 104. So from a global market standpoint, you would say that it is status quo. Europe, well, that vote by the German parliament on that new sort of, for the new fiscal package would be done today. That becomes a talking point. And China and SGX, they are indicating that we are in for a good start. So from a global market standpoint, I think sometimes no news is good news. The setting on the table is that US is underperforming, rest of the world is doing well. And from the rest of the world, which is Europe, Asia, I guess you pretty much are getting a sense that we could be in for a good day of trade.
Okay, that's the trade setup looking like, and the implied open once again is indicating a very strong day for us. 22,750 is what it's touching. I guess the only puzzle is that FII sell figure yesterday, but we have to get into further details as to whether it was short covering or was it pure selling still. Yeah,
so don't act, don't react, don't act, don't react if you see that 4,000 crore sell number. Yeah. Let's look at, they always never judge the book by a cover. Let's not read the pages. What FIs have done yesterday, interestingly, is that they've sold in the cash market and they bought in the F&O market. So what they've done is that you've sold in the cash market, but in the F&O market, you bought into stock futures. That could be a hedge fund. It could be some program of some algorithm which could be at play. This is not that, fresh 4,000 crore of sell figure has come into the system. I think there is an interplay of FI with F&O, and there is an interplay of F&O activity in terms of the factors which were at play. So if the cash market figure of 4,000 crore would have been not, would have not got tabled with that long stock futures figure of 4,000 crore, then trust me, this market would have been in a different zone. The fact that it is more like a neutral, neutral pattern yesterday is because banks, they rose in the second half of the trade. Nifty did not crumble down. So net the liquidity, which is FI selling in the cash market versus FI in the F&O market, I would say it was actually neutral. So please don't react too much into that number yet. Then you look at market and you say, okay, where are we headed? Where are we headed? And we've come more than 1,000 points, Aisha, on the Nifty. It's not bad. I mean, considering the sentiment is sour, nobody wants to buy, nobody wants to, participate. The long guys are still crumbling under pressure. The bulls are still licking their wounds. The market has done reasonably well, at least for large cap stocks. Nifty from the recent low, I think, has not done remarkably well, but from the recent low, which was made sub 22,000, I think it's a good, neat 1,000-point rally, which I think needs to be applauded and which needs to be understood. Where do we go from here? Purely, I mean, global cues are okay. Nifty is stable. We are crawling back up. No V-shape rally. And if you stay like this, and if there is no bad news and if the macro improves, which it is for India, then I will not be surprised that you will actually see some more participation which will start coming back from some of the high beta mid cap stocks. Yeah. I think that trade is around the corner now.
Yeah, that seems to be the case. And the macro setup as well has been changing, right? You've got a stable rupee at your hand, the data points coming in from the trade deficit last evening, that has managed to shrink. And yeah, the gross tax collections, that's seen an uptick of about 16%, although the big spike was STT, a solid 55% jump.
See, macros are getting better, Aisha. We are no longer talking about the linear decline in rupee. Last week, the forex reserves were $15 billion. I think after 2 months, they've gone up by $15 billion. The swap is working. Second, the tax collections, which were estimated to be for the full year about 12 to 13%, I think for the quarter gone by, which is advanced tax, which is, of course, the Q4 is always the high number, I think is above the estimates. That's also great news in terms of where the market is getting in terms of the advanced tax estimates. What are advanced tax estimates? Whatever companies are assuming for the full year they would pay in terms of taxes, they have to perhaps pay those taxes by 15th of March, which means the 15th of March advanced tax numbers are pretty much a telltale sign of where the earnings and where the profits are likely to move for companies. And then trade deficit is down, which means, and that's largely because of gold and what's happened on oil prices, exports have picked up. That is also a stable factor for the rupee. So the macro scare which was at play, weak rupee, strong dollar, FI selling, slowdown in economy, drop in earnings, all that is getting addressed one by one. And I think, I said a month ago, Aisha, it's time to have a glass half full approach. I would now say that the graph is actually 3/4 full.
Yeah. And I guess, other than mid-tier banks, one is wondering whether the contra bet also clubs in maybe NBFCs. What do you do with metals right now, some of the other globally linked sectors, etc.?
See why metals will do well. Let's understand. Keep US out of the equation. Europe is stimulating their economy. China has come back. Japan has increased interest rates. India, things will improve. So US is 5% of the total population, but 35% to 40% of the total population still sits in Europe, China, Asia. So that's 35% of the population. It's important to understand that what's happening to that end of the economy, and that's where I think the metal demand would kick in. And now this entire war-like situation which happened between Russia and Ukraine, that's also settling down. Sanctions, I think sooner than later would be improved. All those factors would be at play which could stimulate demand going forward. And then I also think that somewhere a trade is coming in NBFCs because too much of liquidity is now coming back, the lending problems are getting sorted, interest rates are coming down. For NBFCs, there were two things: availability of cash, which is liquidity, and B, availability of affordability of interests, affordability of cash, which is interest rates. They both are looking favorable right now. So I will be more bullish than bearish. It is time to perhaps see some opportunities on the long side rather than selling everything on the uptick. So I don't think you should sell the uptick now. We'll deal with it if something changes on the global level. But stay with the trend. You may not get sharp rallies, but shallow gains are something which you will still find if you're committed to the market. That's my limited point.
Okay.
If you like this video, then like, share and subscribe to ET Now.